Good morning, everyone, and welcome to our March 2025. Sensing some lag here on the live stream. Temmie, can you hear me? Can you see me?
Yes, I can hear you and see you.
Okay, perfect. All right, let's start that again. I was freezing up on my end, hopefully not freezing up on other people's ends. All right, so welcome to the March 2025 Market Insights. We are going to follow the same format that we've been following for a bit. So I'm still frozen on my screen. Can you hear me, Temmie?
Yep, there's no lag at all.
Okay. All right, awesome. So we're going to follow the same format that we have been using recently in this live stream, where we no longer can have interactive dialogue as far as audio dialogue, but we are taking comments via comments on YouTube, comments on Instagram, Facebook. We're also streaming to LinkedIn. Temmie, who is not just a pretty face at Koji, as her ticker says, is going to be handling the moderation. And we're hoping to have a really interactive session. So please chime in with as many comments as you would like. This is primarily geared towards real estate agents and industry professionals, but all consumers, buyers, sellers, anyone who has questions about the real estate market, you are welcome to join and stick on. And please keep the questions coming. So kind of to start it off, we would like to hear where are mortgage rates at? And then I'm going to jump into our framework just because there's a little bit of lag on the live stream. So I want to capture those questions before we move on. We are mixing up the content just a little bit to reflect reality. Get to that in a second. So we're going to start off covering mortgage rates and economic data. And as you can see, I have in all caps, what is going on with the economy? And that is... we always cover the economy, but there are a couple of additional wrinkles with some administration changes and moves that are being made by electric car CEOs and the like that could be having impacts on all of us. So we're going to do a bit of a deep dive into the economy, all of the different factors that go into mortgage rates, talk about where mortgage rates are at. Then we're going to hit the real estate specific data. We're going to take a look at the DMV market for the most recent reported month, which is February of 2025. Then we're going to look at the most recent reporting weeks. We're going to look at that in a little bit more detail because there's a lot of impactful stuff happening. And I think it's kind of more important than ever to get really recent data to try to get a better feel for what is going on. And then we're going to specifically just hit on how are new administration policies affecting real estate. That's something we're going to be talking about throughout the session today, but we're going to at least capstone it there and cover anything we might have missed. We're going to wrap this up with having a little feedback. We're going to wrap this up with some key takeaways. Before we move on, I thought I would add a little interesting segment to the top, which is what coffee is Paul drinking? Today, I'm drinking a Nascimento Pacas from Tim Wendelbo, an incredible roaster in Oslo, Norway. Absolutely delicious in my origami sensory flavor cup. I recommend both to everyone. All right. Do we get any where mortgage rates at? Do we get any people chiming in on that, Temmie?
Yeah, I'm working on getting some people connected. As far as mortgage rates, no one has put anything in yet.
Okay. All right. I know, like I said, I'm suffering some lag on my end. So hopefully we are not having some technical difficulties. All right. So this is a chart historically kind of over the recent past where mortgage rates have been at and where they're headed. And as you can see, we've had a bit of a drop recently. And now I want people to kind of pay closer attention to where mortgage rates were at this time last year and where they are at now in the trend. So last year, over the beginning of the year, moving up, mortgage rates were increasing. This year, over the same time period, mortgage rates are decreasing. And it's not just helpful to know where they're at now, but where they're trending and how it's affecting the market, because understanding the underlying mortgage rate environment really will inform the market data we're going to talk about, and it's super important. Ty Shantiria, I saw you chime in 675. Yep, that's right where we are about right now. The 30-year fixed rate is right about 6 3/4. 15 is always a little bit below that. Jumbo a little higher, and the other products coming in lower. How are people feeling about the economy? I would love to hear how you're feeling personally, what you're hearing from your clients, people concerned, people not concerned. And we're going to run into, while we wait for the live lag to pick up, just going to run into kind of some of the reasons ever so briefly why I cover this stuff. So in a nutshell, this is overly simplified, but I cover the economy because the economy is what drives mortgage rates. The Fed funds rate, the Federal Reserve met yesterday and the day before. The Fed funds rate is important, but that is the rate banks pay to lend to each other overnight. That's not the mortgage rate. Federal Reserve doesn't change the funds rate, and it's directly tied to mortgage rates. It is a factor, but there are many, many factors, and those factors are what we cover. So if you basically take all of the major components I talk about with the economy, put them all together, and that's what influences the bond market, the mortgage-backed securities market, and that's what influences mortgage rates. A little overly simplified, but this will give you a pretty good idea of the factors that are in play. I'm not going to go into a ton more detail on this, but it is in the deck. If you're joining us for the first time this month and I don't already send you these previously, then reach out to me, shoot me an email. You can either email me from my contact on YouTube, shoot me a DM on one of the social media channels. Also have my contact information on the last slide. Okay, Ty is chiming in saying local economy feels incredibly uncertain. Employment's balance. Yep. Yeah, uncertain is great. I would say that is the best way to describe what's going on right now. Is a lot of uncertainty. So when we talk about the economy in general, if you want to sum it up in one thing, talk about gross domestic product, GDP growth. We can see here that we have had positive GDP growth for many, many quarters now. We just closed Q4 2024, 2.3%, a little higher before that. Now, let's get to the Federal Reserve of Atlanta's GDP Now model. So this is the official model of the Federal Reserve of GDP. And you can see it is fallen off of a cliff. Right now, GDP projections for Q1 2024 are negative 1.8%. And kind of want to just let that sink in for a minute and put that into historical context. So negative 1.8%. Like, to give some historical context, and I know there's a bit of a lag, but does anyone know when the last time we would have a quarter where the economy contracted at that rate? And I don't want to hear 2020, because Q1 and Q2 of 2020 pandemic, we had a major contraction of the economy. But then Q3, we had, so basically, I think it was Q2 2020, we had a negative 28.5% GDP.
Right.
Q3, we went positive. We went positive 35%. So basically, we rebounded, captured that right away. So 2020, crazy thing, doesn't count. 2008. So yeah, those are Colin, Shanteria. You're absolutely right. If you wanted to find
Christina.
the last time, what's that?
Colin and Christina.
Oh, sorry, Christina. Trying to look at two things at once. So if you wanted to look to the last time, if this holds, if we do have a negative GDP 1.8% for this next quarter, if that holds, it will be the biggest contraction of the economy since Q1 of 2009. Everybody remembers 2009. That was the Great Recession, or the global financial crisis. Pretty impactful thing. So the economy is definitely softening, and where it ends up, we don't exactly know. But right now, at least, a lot of experts are projecting that the economy is going to have a pretty massive slowdown compared to where it's been lately. And just also want to add to that, like, this is not minor stuff. If you were to go back, so prior to Q1 2009, when was the last time before then that we would have had a quarter with economic contraction like this, GDP decline? The next prior quarter, we're talking about Q1 of 1991. So the economy is slowing down, and it's possible we could have one of the 3 slowest quarters in the past 35 years. All right, now we're going to move on and take a look at inflation. So we have the consumer price index. The 1 month percent change was at 0.2% for the most recent month. And you can see I've added some historical data here in the chart. The all items index for 12 months, we had a 2.8% increase. So this is actually good news on the inflation front, which is a little surprising given things that are going on right now that are causing inflationary pressure. But I think it's just that we haven't had time to capture that yet, and tariffs and other things. So this is good news on both fronts. So the 2.8% increase in February was actually lower than expectations. The market expectations were 2.9%. And as I've said many times, for people who've been on here before, but if we have anybody new, by the time this data is released, how it compares to market expectations is kind of the main driver, because if this data comes in at expectations, the market's already incorporated that. If you have a inflation numbers coming out or jobs report numbers that are coming out, any of the big metrics that are released, if they're matching expectations, you're not going to see a big movement in the mortgage market, big movement in the bond market, because there's a lot of money at stake, a lot of very smart people who are planning their moves well ahead of time, incorporating what they think is going to happen. And so when the numbers are released, if we see major mortgage rate movement, major bond movement, that's usually when it doesn't match expectations, which is why I always, almost always chime in with this data and talk about how it corresponds to that. Did we lose Temmie? Oh, no. How it corresponds to the expectations. So 2.8%, that was lower than expectations. So that's good. Bigger news on the positive front is that core CPI, which is the CPI that excludes food and energy, rose 3.1%. So that's the lowest 12-month increase since April of 2021. So that's positive news. If you look at the monthly increase, both for all items in core, 0.2%, that was below the expectations of a 0.3% rise. So positive news on the inflation front. Not a whole lot of positive news elsewhere, but at least we can take solace in the inflation numbers so far. Jobs last month, the economy added roughly 151,000 jobs. A lot of people might be saying, wait a minute, Paul, we're hearing about all of these layoffs and the federal government, all of this stuff happening. What is going on with that? So that is true, but basically a lot of the stuff happening with the federal government was a little too late in the month to be captured by the jobs data. Oftentimes the government accounts for about a third of the jobs added. So this month didn't account for as much. Healthcare drove about 50,000 of those jobs. Unemployment rate, no shocker here, pretty steady. We've been in that 4 to 4.2 range for quite a while. So employment holding steady for the time being. All right, audience participation again. What happened at the last Federal Reserve meeting, and when was it?
I'm going to take a stab at it. Actually don't know. Maybe was it February?
It was very recently.
So it must
nothing.
Tom said nothing.
Well, that is true. Flat. Yep. The Federal Reserve Open Market Committee met yesterday and the day before, and they held.
Got it right.
Yep. Virginia, our resident economist. I'm your resident amateur economist. She is our resident expert economist. Yep. They held rates steady, and no shocker there. Talked about expectations. Yep. Ty's got it right. Held rates steady, and they that was expected. So that was expected. Nobody expected them to drop rates. There's just too much uncertainty, even though inflation is beat expectations. Expectations are inflation is going to be higher. And Chairman Powell said as much in his comments. So Chairman Powell indicated a gloomier outlook for the economy. Right now, the Federal Reserve is expecting higher inflation now than they were just a short time ago. That's almost certainly because of tariffs. And they're lowering their GDP growth projections. Their projections were expecting GDP growth of 2.1% for Q1. Now that's dropped to 1.7. That is still above, like I said, GDP model, GDP now of Atlanta, the Atlanta Fed. They're projecting a negative GDP, a contraction of the economy. Fed isn't there yet, but there's so much uncertainty. Honestly, nobody really knows. As Ty chimed in, they are still forecasting 2 rate cuts this year, but it's just by a slim majority. I think it's 11 of 19 Fed officials said they're expecting 2 rate cuts. And that could change. We're really in kind of unprecedented times when it comes to the economy and all of these changes that are happening. Temi, did you want to chime in?
I was going to ask a question, but I'm gonna wait a little bit.
Okay, good stuff. Next meeting is May 6th and May 7th. All right, taking a look at the 10-year Treasury. Not a shocker here. It was at 428 as of last night. That's down about 0.35% since we last met, and that's right around how the same amount that mortgage rates have dropped. And that's no surprise. Usually the 10-year and mortgage rates are not necessarily an exact lockstep, but if one's going up, the other's likely going up. If one's going down, the other's likely going down. That's because they compete for the same customers, people who want safe investments with a predictable return. 10-year Treasury is about the safest investment, and so there's always going to be a float between the two. All right, now moving on to some of our other economic metrics. Retail sales, they were up 0.2% from January, but this was much lower than expectations of a 0.6 increase. Sales are up 3.1% year over year. So these were weighed down by low auto sales, which is kind of interesting. I'm going to get to something else about auto sales. Auto sales are a major component of the economy and can really skew a lot of these numbers depending on where they're heading. So if you excluded auto sales, then retail sales rose by 0.3%, little closer to expectations. And the expectations were that retail sales minus auto sales would have risen in this range. So basically, you take out auto sales, the rest of the economy kind of hit expectations, but with those really weighted down. And getting back to auto sales, industrial production and manufacturing. So industrial production, think of that as everything, tangible goods, intangible goods, everything that's produced. And then manufacturing is just a large subset of that. I think tangible goods, and that manufacturing accounts for about 75% of these numbers. So industrial production was up by 0.9%, which were well above the 0.3 expectation. But this was boosted by an 8.5% jump in motor vehicles and parts. And the consensus view is that this jump in motor vehicles and parts was driven by a race to do as much as possible from these auto manufacturers, basically before the tariffs hit. There is anybody who's been following the news or understands how automobile production works. There are a lot of manufacturers who have plants in Mexico, in Canada, and there is a lot of interconnection in this industry. And so you have these motor vehicle manufacturers trying to ramp things up to get ahead of the ding they're going to take with these tariffs. So manufacturing output was up also above expectations. Okay, now we are going to take a closer look at what is happening specifically in the DMV real estate market, and kind of interesting stuff going on. Like I said, we're loving questions, we're loving comments, so please keep those coming and keep the questions coming. I can dig really deep into a lot of this data, and I do, but there's going to be a lag in. There's a little bit of a lag in in any kind of data that I can collect. I mean, even if it's the most recent information on closed transactions, we still don't know what's going on with the pendings. Whereas we can have people on this call talking about what they went under contract at, what they're seeing kind of immediately. And so what the wealth of knowledge we have on this call is always going to be more up to date than virtually anything else I can pull. So love it when we get information from the group.
Okay, now as we step into the DMV market, I know you guys are going to have questions. Please feel free to put it in. I'm gonna make sure Paul gets it.
Thank you, Temi. And it's kind of funny. I don't know if this is on my end. Excuse me. But I was just pondering last night that I should probably get a hardwired Ethernet connection for these sessions to make sure that slow streaming doesn't impact or negatively affect anything. So apologies if we're having lag for anyone or if there are some technological issues. All right, we're going to start off by looking at historical context, kind of where has the DMV housing market been? Where is it at right now? We only have 2 months of reported data so far. So take these 2025 projections with a little bit of a grain of salt. It's just 2 months into the year. But right now we are on pace for pretty much the same kind of year we had last year and the year before. Now, that could change a lot, but we're right about on pace. Right now, with the first 2 months, we're on pace to hit a little over 51,000 transactions. Last year, we were at 49. The year before, we were at the high 48s. As you can see, this is down from the pandemic peak and still a pretty low level. The last time we were at these levels was 2008, 2009, right around then. All right, sales price for the DMV. The median sales price was $597,000. This was up 6.6% year over year, and this is now the 21st straight month of monthly year over year price increases. And so this is, if you're working with buyers right now who are wanting to take a break or wanting to wait, it's kind of tough because you can always refi down your mortgage rate, but you can't purchase a home and get the money back for what it's appreciated at in the past 12, 18 months or so. So DC pricing pressure is a little bit different, a little bit of a different situation. And so if you have clients focusing strictly on DC, then you need to pay a little bit more attention to those numbers. But in most of the DMV, we're having strong upward pricing pressure, and waiting to purchase it's just costing more money. And there is low inventory. It's increasing, but we're not expecting that to change dramatically anytime soon. Granted, wild cards going on, unprecedented stuff happening in the world. But like I said, 21 straight months of appreciation in the DMV. So we're looking
Hey, Paul.
Go
Can
ahead.
I ask a question?
Yep.
Do you guys, if everyone who's listening, are you guys still getting clients that are waiting for the prices to go down? Is that still a conversation that you're hearing? And in the meantime, as we wait for response, Colin says he contacted Verizon last week because of a lag, and they tripled his bandwidth and lowered his bill. Paul.
Nice. So I'd like to have Verizon. Xfinity is the only option here, so we'll have to see if they can respond. We have any Xfinity reps on the live stream? Now's the time to step up.
So Tom says that he's not hearing any of that because I know that was something that we heard a lot of in the past. So I'm not sure if that's something that we're still hearing a lot of. So I wanted to find out from you guys if you guys are hearing that. Yeah.
Yeah, I would say, I was just about to mention, I would say that if you're a condo buyer in DC, you're probably expecting a little bit better scenario, but it's still not. I mean, we're seeing, and we'll, I don't think I have it. Yeah. Yeah, good point, Ty. Out of town buyers less informed. Is more akin to say DC prices are going to drop. But I find that's kind of what's going on in general. If people aren't attuned to the market, they're thinking that they might be able to get a bargain now, whereas we're just in an area with constrained inventory. I've done on past sessions showing how we've been in a systemic housing shortage in the United States for years, and we're not even having new builds keep up with demand, and there's just not enough supply out there. So it's like, if you don't have enough supply, how are prices going to drop in a meaningful way?
Yeah.
Christina mentioning DC clients are waiting for prices to drop. They heard new DC housing market is falling. So we're going to get to that. We're going to get to that specifically when we look at county data in just a minute. Yeah, overnight sales. So Colin, I know Colin practices in Northern Virginia. And Northern Virginia, like most areas, when we'll see it a closer look when we get to the county data, there's just no inventory and pricing pressure. But DC, so DC had year-over-year price appreciation this month as well. So prices in DC aren't necessarily dropping. Condos decreased 2% year-over-year. Fee simple was up. So if you have fee simple buyers in DC who are waiting, they're just probably waiting to pay more for their home. Colin mentioning home down the street. Yeah, 1.1 million 4 years ago, just got 1.5 cash. And that makes sense. So I believe DMV appreciation overall in the past 5 years was 40%. So that tracks. I mean, that's basically right there.
Paul, I had a situation. It was right after an article came out about a county in Maryland and because of job losses, fear of the real estate market going down. So there was no stats to back it up. It was just, hey, we just don't know where the market is going. And I had a listing in Montgomery County that came live, and then I had a lowball offer come in. And when I asked the listing agent about it, he said, well, the article just came out, so they are trying to get ahead of the market crash. And I said, there's no substantial evidence of a market crash. I sent him some stats, and I said, please let your buyer know. And we were able to increase the price. I was like, if we accepted your offer, we would be creating a crash. Mm-hmm. And so they were able to get the offer back up to an acceptable amount, and then we were able to proceed. But it's like, we're a part of this. Mm-hmm. we can create a crash. Yeah.
Yeah, at least on the micro level of Temmie's listing. Hysteria. Yeah, but that's a great point, because there is a lot of misinformation out there, and if you're an agent and you're just kind of repeating things you heard based on poor data, poor sourcing, you're doing your clients a disservice. I always tell my clients, it's not my job to tell them what to do. It's my job to give them as much information as possible so they can make an informed decision. And that's really the reason why I started these sessions almost 3 years ago now, which is kind of crazy. But I felt there was a void, and there was nowhere where I could just go, where I could turn to have somebody present this to me. And I felt it was too vital. So I started digging into it and sharing. And it really is. It's just so important to know what's happening in the market, to be able to tell our clients accurately what is going on so they can then make informed decisions. And if the decision is they want to wait to buy, they want to wait to sell, or they want to, buy as soon as possible or sell as soon as possible, whatever that is, whatever their decision is, as long as it's an informed decision, more power to them. But when people are making decisions based on inaccurate data, that's when everybody kind of loses. So Sam is asking, would I advise DC condo buyers to wait based on what I just said? And what about condo sellers? Honestly, so condo sellers, if somebody doesn't, personally, I'll give you, personally, I've advised a couple of clients. I've had clients come to me and said, Paul, I'm thinking about selling now. These are investment properties for condos. Like multiple clients have come to me and said, Paul, I'm thinking about selling now. What do you think? It's like, if you're just thinking about it, if you don't mind keeping these as investment properties, it might be a good idea to keep these as investment properties for a bit longer, because there's still strong demand for housing, but the condo sale market is a little weak. And so you might be able to do a little bit better if you hold off. And sorry, I missed, what was Virginia's comment?
Sorry. So Virginia was responding to Sam. I thought it was a good response. Sam, I would not wait. You got good opportunity to negotiate good deals for your clients. And Sam responded, that makes sense. What about sellers? I have a few investor sellers who are trying to time the market to maximize equity.
Yeah, and yeah, then I saw Virginia chimed in on rental prices are still really strong. Yeah, and it's though when talking about things in general, so the condo market is a little bit softer, but good condos are still selling for a nice price, and there's still demand. Very full pipeline of condo deliveries. Yeah, that's a fair point as well. So one of the wild cards here, and this is one of it's like there's stuff that's just unknowable right now. All we can do is be as informed as possible so that we can have an idea of what's most likely to happen, and then also as things change understand how those changes could affect the market. And we have a lot of different things happening right now. So you have, obviously everybody's heard about federal government employees being terminated, being riffed. Right now, at least the probationary people, there's a judge's order blocking that, so they are being rehired or having that rescinded, and that could have a softening effect. I think you have about 150,000 civilian federal employees in the District of Columbia. But there's also a mandate for a lot of these agencies to return to work. And so if there's a big push to return to work for people who are based in DC, that could cause a spike in demand for the DC real estate market. And now we've all heard that there's also a directive to move all of these offices out of DC. Just logistically, that seems about impossible. So I'm not sure how that could possibly happen. But full disclosure, if all of these federal government agencies moved out of DC, then that would have a softening effect on the DC real estate market. Important to note, though, and this is being informed so you understand what's going on. When there's all this talk about federal government employees being terminated or rift, only about 15% of the, I think it's even a little less, only 15%, maybe less, of the total federal employees are in the DMV. So the overwhelming majority of federal employees are elsewhere in the country. I believe California has more civilian federal employees than DC does. So there are a lot of federal employees throughout the country. Nowhere near the majority are in this region. And it is just a percentage of the workforce. All right, diving back into the real estate market, looking at closed sales and new pendings. And this is where I said before, if you're following the mortgage rates, this should give you pause at least, because closed sales were down 4% year over year for February. New pendings were down by almost 10%. And you can see where this tracks historically. The orange line is this year. The blue line, it was last year. And then the gray is 2020 to 2023. And so these were kind of tracking where we were last year, pretty close, a little under for both of them. But both of these are a big chunk of where we were before. And this is the major takeaway of this for you should be that buyers are spooked. Now, is this going to be a long-term thing that more buyers are stepping out of the market permanently, or is this just a pause to see what happens? We can't say for sure. My feeling is it's a temporary pause for some of these buyers to see what happens. And then depending on what happens, it will inform their future decisions. But we should be seeing the reverse of this. Pretty much mortgage rates jumped up in early 2022. And since then, for the past 3 years, there has been a direct inverse correlation or direct correlation, depending on how you want to talk about it. But mortgage rates go up, buyer demand goes down, new pendings go down. Mortgage rates go down, new pendings go up, buyer demand goes up. From January to this point last year, mortgage rates went from like 6.7 in January up to 7.2 around now. This year, over that same time, they've gone from about 7.1 to 6.7. So completely opposite direction. In light of that, we should be seeing, if all things were equal, we should be seeing new pendings going up, buyer demand going up, if it just matched what had been happening within the real estate market over the preceding 3 years. So clearly there are factors outside of just the real estate market that are at play here. And, it's no surprise. It's all the uncertainty that's going on with the economy. So that's just something to keep an eye on. Right now, buyer demand is not tracking what would be happening outside of these external factors.
I was going to say, so guys, with real time, just because we are, this is up until February. So what are you guys experiencing now? Have you guys seen, because it did feel a bit slow January, February. Are you seeing an uptick of buyers now coming back, asking, wanting to purchase, especially with the interest rates dropped? Have any of you taken advantage of letting your clients know or your pipeline know, like, hey, interest rates have dropped a little bit? What are you guys seeing currently right now, real time, on the market? I'm definitely seeing more of an influx of buyers on my end popping back up and saying they want to purchase.
Mm-hmm. Yeah, and I'll respond to that while we're waiting for comments in the chat to come in. I haven't had any buyers put anything on pause, and if anything, personally I've seen that buyers who were already in the market are a little more excited or more engaged with rates coming down. I did see, though, in a situation, this was another offer submitted on a property I submitted on for my buyers. We had competing buyers submit an offer in the morning and then rescind it in the afternoon because something happened with, I think it was the day the Department of Education announced a lot of cuts. So it might have been that. But there is that level of uncertainty among federal employees, and if someone loses their job, obviously that could affect their home search. But that's the only direct thing I've seen as far as somebody pulling back is just in a competing situation.
How about you guys? Are you seeing a shift from the beginning of the year to now, as far as like, is the spring market opening up for you guys?
While we're waiting for more questions and comments, we'll pop. Oh.
So Shantiri says, I'm seeing a heavier increase in sellers, especially investors looking to sell rentals. And Shantiri is representing the North Carolina and South Carolina market, as well as DC and Maryland.
North Carolina, South Carolina, which is basically Metro DC. You have a lot of movements, or the halfbacks, the people who went from DC to Florida and then came back halfway. More buyers ready. Yeah. So at least so far, what we're seeing is, inventory is accumulating, and we see here. So active listings up by 30% year over year. Even though new listings were down by just a little bit. So this is for February. This doesn't hold true for the early March data. And it's important to note, though, that this is the inventory is up, but this is the 13th straight month of year over year inventory increases in the DMV. And so this is another thing, like you look, inventory's up. People are rushing to sell. The real estate market is changing dramatically because of what's going on in the new administration. Yeah, there are some changes happening, and it's important to watch them. But we have been seeing increasing inventory for 13 straight months. So for over a year, where did I go? Okay, all right. I didn't have a slide for this. We're going to get to it when we look in the county specific data, but so inventory has increased. Yeah. 13 straight months, year over year inventory increases for the DMV, but there is still no meaningful inventory in core DMV outside of DC. Still months of inventory is between like 1 and 1.5 in most areas of DC. So we're still at these really low levels, and we'll look at a little more closely when we do the county breakdown. So this is when you send out the deck, 2.5 years of low inventory. Absolutely right, Virginia. So just all kind of summarized there. If you want to take a closer look when you get the deck. Now, this is just a county breakdown. Look a little more closely for what's going on in some of these specific areas. So closed sales are down everywhere for February, except Loudoun County, Montgomery County, and DC. But DC is just about even. Median sales price, we already talked about median sales price going up. So that's up everywhere except Alexandria and Frederick. So up, like I said, even in DC. So median sales price was up even in, yeah, absolutely, Ty. And we're going to jump into that. We're going to jump into the weeklies once we cover the most recent month. So again, DC, if someone's holding off for bargains in DC, it's, if you're looking at fee simple, you're still looking at upward pricing pressure. You're still looking at price appreciation. And the condo decrease was only 2% year over year. So it's not like the condo market, the bottom is falling out. We're just seeing a softening. And condo inventory is still, basically condo inventory is at equilibrium. I know we've been in such a strong seller's market for so long that those of us particularly operating in DC, where everything used to go immediately, it seems like the condo market, maybe the bottom's fallen out, but we're still looking at, it's like, I think 4.6 months of condo inventory as of this past month. I mean, that's that's equilibrium. That's an even market, not necessarily a buyer's market, not necessarily a seller's market. I know to a lot of agents, I hear them screaming, it's buyer's market, it's buyer's market. Well, if you look at the data, it's an even market. It's just we've been in a seller's market for so long. Even seems like it's kind of crazy. It's just like this wealth of inventory. Timmy, I see a question forming.
Yeah, Paul. Where does a buyer's market start? Is it 6 months?
So depends on who you ask. I mean, it's like basically I consider equilibrium in that range near 6 months. Over 6 months, I definitely say buyer's market. For like, because of recent historical just lack of inventory, 6 months feels like a buyer's market. But yeah, anywhere less than 4, definitely seller's market. More than 7, definitely buyer's market. And then when you get in that middle range, it just kind of depends on exactly how you want to define it. Yeah, definitely important to kind of understand that and what that means. Median days on market, stuff is still going pretty quick. Northern Virginia, fairly hot. Median days on market in Nova, we're right around a week. 10 days in Montgomery County, so a little bit longer. 18 in Prince George's County, and DC leading the way, days on market. No surprise to anybody who's been following this stuff, at 38 days. County comparison, when we're looking at new pendings, new listings, and showings. So, okay. Using a little bit of a different format and confusing myself. So we shall move on. So new pendings are down everywhere except Loudoun, and new listings are down everywhere except Loudoun and Montgomery County. So showings, they're down everywhere from -4.4 in Loudoun to -23 in Montgomery County. And this just goes like at a county by county level, where it's like, okay, this data doesn't correlate to what we've been seeing for the past 3 years with mortgage rates. Mortgage rates are dropping. We should be seeing a little bit of an increase in showing, a little bit of increase in new pendings, and we're not. And so there's at least some level of buyers who are spooked, who are on pause, and are at least temporarily holding off. Active listings and months of supply. So this just reflects what we've seen already. Active listings are up everywhere. It's just to varying degrees. But as I also mentioned, so months of supply outside of DC, it's really, inventory has increased, but it's a small increase. So inventory was nothing. It's a small increase. Now it's almost nothing in all of these areas outside of DC. DC is still the only place with meaningful inventory at 4.2 months. Home demand kind of encapsulates what we've already talked about. So demand has been increasing over the past month. I mean, really since the beginning of the year, it's what we typically see. We see a little bit of a ramp up in buyer demand, but it is lower than the same time last year. And you can see this here in the chart. We've been pretty close to last year's rate. We've been mirroring it for much of the year, and it'll just diverge in various points. But since end of last year, we've been pretty close to the same level of demand. And this just puts it into colors, slow to limited throughout the DMV. Now we're going to take a look at the most recently reported week for the DMV wide. Then we're going to break into county data. So showings are down, but new pendings are up. And this is also, when you look a little closer, it's important to note. What does this mean? So what this does mean is that there might be fewer buyers out there, but the buyers who are out there are serious. So we're seeing, I mean, showings down by almost 10%, but new pendings are up. And so that just means those buyers who are out there aren't messing around. And that could be that you have a lot of these buyers. We have a lot of buyers who were waiting for mortgage rates to drop. And right now they might think, hey, this is as good as it's going to get. I need to purchase. I can only wait for so long. Let me go ahead and jump in. And so this is where
that as well. Sorry, I just wanted to ask, are you guys kind of seeing that as well? Do you feel like the buyers that you have currently are more serious and more focused as far as purchasing a home? Are they more on the grind? Are you guys seeing that, or is it kind of still the same for you guys? I definitely feel it. I feel like I'm not doing as many showings as I used to, but we're getting a lot more focused in because the interest rates are down. They want to take advantage of it, so they're focused. Shantaria says yes, the buyers are locked in. Yep. So we're feeling exactly what you're saying, Paul.
Nice. So this is the new listings, or rather most recently reported data DMV wide. And Bright has also started to release, since we met last month, shortly after that, they've started to release a county by county breakdown weekly. I've included in my deck the last 2 reported weeks. We're not going to go through all of this in detail, but I just wanted to include it here for people to take a look. So wherever you focus on, just take a closer look at this county data. You can see one thing I do want to mention. So for the Bright MLS area and greater DC region, we are seeing we are outstripping the other areas in new listing inventory. So we are seeing a little bit more inventory coming on the market. 2 weeks ago, we had a 20% bump year over year. Rest of the Bright MLS had 14%. Now we're up to 30. We've kind of doubled the rest of the area. Those numbers diverge a fair amount. It still doesn't necessarily mean it's tied to what's happening with the federal government, but it is something to pay close attention to. But I still want to note, like, even with these inventory bumps, even with these new listing bumps, so we're seeing, year over year, we have more listings. We have more listings now than we did last year and also the year before, but we still aren't at new listing levels of the year before that and the year before that, and kind of a baseline level. So we would need to see an additional increase in new listings in order just to meet kind of that baseline normal level that we've seen in years past.
So I feel like when, and this may be weird, but like we've been saying that we want more inventory for quite some time now. And I feel like in the past it felt good, but I think with the job market, it feels weird saying like, hey, we need more inventory. I don't know if there's that, if you kind of feel that like we have low inventory. It's good that we can get more inventory, but we want to get it the right way, I guess.
Yeah, I like that. We want more inventory the right way. we don't want anyone kicked out of their homes.
Yeah.
And that's a nice segue into how are these new administration policies affecting real estate. And it's too, I said, like, right after the election when I talked about this, like, how is it going to impact? I said it's too soon to tell. Last month I said it's too soon to tell. And it really is too soon to tell, because it's like anyone who tells you they know what's going to happen, it's just impossible to know, because like we have a better idea of actions that the administration is attempting to take, or objectives they're attempting to reach, but whether that's possible or not, who knows? There have been a fair amount. The number I saw, I think 60,000 federal employees have been let go already. That number was higher, but 25,000 of the probationary employees, there was a judge's order. It blocked their termination, and now they're coming back to work. I mean, I think they're on paid administrative leave. And so they're like it's going to take a while for these legal battles to play out. And, a lot of, even if the intention is to terminate these employees, whether that will actually happen, who knows? Also, it's important to note, like I said, 85% of federal employees are outside of the DMV. And these cuts are going to be having a dramatic impact throughout the country. And my personal opinion is that as a lot of supporters of the current administration are impacted personally, or friends of theirs are impacted personally, there's going to be a lot more resistance to what's going on and political pushback. And we've already seen this in a lot of sectors where we're starting to see resistance to some of these actions. And also, it's just to put more of this in context. If you were to look at the federal government spending, if you look at entitlements, which is Social Security, Medicare, Medicaid, basically entitlements, defense, and Veterans Affairs, that accounts for, I think, somewhere between 75 and 90+% of the budget. And so discretionary spending only covers a certain amount. If you're, and I know that there's mandates for all departments, and the Department of Defense has a mandate to cut spending as well. But that's also when you get into decreasing defense, decreasing Veterans Affairs, you get a lot of pushback. So how realistic these cuts are, both from a political appetite standpoint and then from a legal standpoint, it's really an open question. So that's just hitting home, like it's too early to tell how this is all going to impact the housing market, because it's too early to tell what is even going to happen. And so I mentioned before, so we all heard reports about this boom in inventory, and early on the reports were based on nothing because we hadn't seen a boom in new listing inventory. So now we're seeing more of a bump in new listings, but like I said, it's still not even reaching the normal level we've seen in years past. Just take a quick look at. Oh, that's interesting. Force majeure. So, we're not really holding court these days. Yeah. Yeah, there are a lot of like suits being brought by unions and organizations, but individuals can also take up suits. So there's a lot of resistance, both politically and legal, to a lot of these actions that are taking place. And so what will actually stick, what will actually happen, it's impossible to know. And I've already kind of covered this in various points. I mentioned the buyers are spooked, how buyer demand and new pendings doesn't really track what we've been seeing for the past 3 years as far as mortgage rates and how that relates to demands and pendings. I'm going to go kind of into the takeaways, both for real estate agents and professionals. Takeaways, if we happen to have any consumers on here, if we have buyers, sellers, or investors, they're very similar. They're very similar, because the takeaways for agents is kind of what's important to tell your clients, and then the takeaways for the clients is what the agents would tell them. So stay informed to serve your clients best. Say that's major takeaway, is that we're just in unprecedented times, and staying ahead of market trends is crucial. So we just need to understand these economic shifts and their impact on real estate, and then you can guide your clients with confidence. Still a smart time to buy. So I said DMV home prices have appreciated for 21 straight months. So if you had a buyer who a year and a half ago was like, I think I'm going to sit tight and just wait and see how things go, they would most likely be seeing that the homes they like are getting more and more expensive. As I mentioned, you can always refinance. You can always refinance when rates drop, but we're not seeing a lot of downward pricing pressure. And just to go back, I only know this through historical data because I wasn't practicing real estate at that time. But even during the Great Recession, during the global financial crisis, a lot of areas of DC property values just stagnated for a bit. They didn't necessarily come down that much. And that was a major point of economic turmoil. So we can have a lot of uncertainty and still not have real estate prices drop in a meaningful way. And then last kind of takeaway is that sellers still have the advantage outside of condos in DC, where we're pretty much at an even market data wise as far as inventory versus demand. In most other areas, it's a seller's market. And so it's a great time if somebody's thinking about selling, it's a great time to try to maximize that value while demand stays strong. And then if we have any consumers on here, it's kind of the same thing. Stay ahead of this market. The economic landscape shifting fast, so it's just important to know what is happening and how it could impact, because usually when you're making a real estate decision, it's like you make a decision now, but the actions will be playing out over the next few months. And so it's important to be forward looking, forward thinking, and have people who are giving you good advice who understand that as well. Buy now could save you more later. You can always refinance down the road. And then, like I said, seller's market is still in your favor. So that's me. And if you have questions or comments, feel free to reach out. If you're watching this on YouTube, you can hit like, subscribe, all the usual stuff. Temi, what is your Insta handle?
Just Temi Akoji. And I do have a thought about the last thing that you just said. So I remember, because I became a real estate agent in 2008 when the market was crashing. Every location, even every county in Maryland, had different rules when it came to how to handle the crash. And so they put different rules in place, even when it came down to like foreclosures. Like, so DC had a different, I think they held off on foreclosures for a bit, or for a very long period, versus other counties in Maryland and Virginia. And so so the county I was living in, I think our highest sales price was, I think, close to the fours, and then we went all the way down to I think our average sales price went down to 146,000. And so when people are scared, I get it. Like, if you were in buying real estate at that time, there is this fear of like, will we go back to 2008? And which is why we are doing these calls, to make sure that we are kept abreast of like what is happening and will we see the shift. And there's right now, you can reassure your clients, one, what happened in 2008 was completely different than what's happening now. But then two, like, as we constantly watch the numbers, it's not telling the same story, because we went down in the fours to low 100s in a matter of 4 years. So every area, every location dealt with something different. So if you were in DC, you had a completely different experience than if you were someone in Prince George's County, right? So so we want to make sure that like, we're sensitive to that, like, hey, but then also, again, this is why we do these calls. This is why when someone asks about the market, we pull up stats. We don't give opinions based off our emotions, because we want to make sure that people are aware of what is actually happening, not the fears that we personally have. So yeah.
Great points. Thank you for sharing that. And that is true. I mentioned that kind of core DMV prices remain constant, but you get a little bit farther out in some pockets. Yeah, there are areas of DC where it's prices from before 2008 only, not DC proper, but prices from before 2008 only recovered recently. And so that is absolutely true. And it's also like, it's okay to have a healthy fear when making financial decisions.
Yeah.
But it's also there's the only right decision is an informed decision. And the same thing, like right now, there's a lot of economic uncertainty. A lot of people are talking about pulling money out of the stock market and into the bond market or into safer things. And it's just a risk reward. It's like, okay, is your appetite for risk? Like, do you want to forego the opportunity of higher return, get something stable? Or are you willing to take that risk for something a little higher? Like, do you want the stability of knowing that you won't have an investment that might decline in value if things get a little uncertain, but the flip side of that, just knowing that you're going to be paying rent that will likely be increasing indefinitely, and you won't have that wealth building asset. And I honestly believe there's no wrong answer. There's no wrong action unless it's uninformed. And that's why we do this. So thank you all for joining us. Any closing thoughts, Temi?
Nope, that's it.
All right.
Informed.
Thank you so much, Temi, distilling all of this information and input into a easily digestible manner. Appreciate you so much, and hope you have a wonderful rest of your day, and same for everyone else who's joined us.
Yeah. Thank you guys for joining us. Remember, third Thursdays of every month.
every month, like clockwork. Clockwork can't get rid of us. All right, take care.